Hi students, I hope you all safe and healthy with your family and friends. This video we are going to learn about 12th Standard Accountancy, Chapter 5, Admission of Quarter, Exercise sum number 6. Let's read the question. Sasi and Shankar are partners, sharing profits and losses in the ratio of 5:3. The firm's balance sheet as on 31st December 2017 was as follows. So the balance sheet is given below. Apart from the balance sheet, they have given the additional information, that is, on 31st December 2017, Shanmugam was admitted into the partnership for 1/4 share of profit with 12,000 rupees as capital subject to the following adjustment. Furniture is to be revalued at 5,000 rupees and building is to be revalued 50,000 rupees. Provision for doubtful debts is to be increased to 5,500 rupees and unrecorded investment of 6,000 rupees is to be brought into the account. And unrecorded liability 2,500 rupees has to be recorded now. Pause journal entries and prepare revaluation account and capital account of the partners after adjustment, after admission. So, from the given information, we are going to pause journal entries, revaluation account and the capital account. Let's see one by one. First, we are going to see the adjustment. On 31st December 2017, Shanmugam was admitted into the partnership firm for 1/4 share of the profit with 12,000 rupees as capital. So, who is the old partner? Sasi and Shankar are old partners. They sharing their profit and losses in the ratio of 5:3. Shanmugam is the new partner at the time of admission who brings the capital 12,000 rupees. Okay. So, Shanmugam brings the capital into the firm. Okay. So, cash comes into the firm in the name of capital. If the cash comes into the firm, what is the journal entry? Cash account is to be debited because cash is the receiver. Okay. So, debit the receiver. Cash account to account data 12,000 rupees entered. Who is the giver? Shanmugam is the giver. Okay. Why? Because he brings the capital. Who brings the capital? So, Shanmugam is the giver, credit the giver. What is the format? Credit the giver. So, to Shanmugam's capital account 12,000 rupees entered. Then, furniture is to be revalued 5,000 rupees. Already we have furniture 6,000 rupees on asset side of the balance sheet. Now, revaluated furniture 5,000 rupees means what? Furniture account decreased. How much rupees? 6,000 rupees decreased. Okay. So, if the furniture account decreased, furniture belongs to which account? Furniture belongs to asset account. So, asset account decreases. Okay. See the format. If the asset account decreases, the firm partners get loss. Okay. If the partner get loss, what is the narration? Where is revaluation account appears? Revaluation account appears on debtor side. Okay. So, revaluation account debtor 1,000 rupees. Which account is to be credited? Concern asset account is to be credited. So, furniture account 1,000 rupees credited. Okay. And building is to be revalued 50,000 rupees. Already we have the building account for 34,000 on asset side of the balance sheet. Now, building account revaluated 50,000 rupees. 50,000 rupees. So, what they tells us? Building account increased. How much rupees? 16,000 rupees building account increased. At the time of revaluation with the current marketing value, building account increased 16,000 rupees. Building account belongs to which account? Building account belongs to asset account. So, asset account increases. If the asset account increases, partners get profit. Okay, old partners get profit. If the old partners get profit, where is revaluation account occurs? It appears on credit side. Okay. So, revaluation account is to be credited. Which account is to be debited? Concern asset account is to be credited. Debited. So, building account data 16,000 rupees to revaluation account 16,000 rupees. Okay. Then, provision for doubtful debts is to be increased 5,500 rupees. Provision for doubtful debts means what? It's a loss. It belongs to which account? It belongs to asset account. So, asset account get loss. Okay. If the asset account get loss, what that clause tells us? Revaluation account is to be debited. So revaluation account is to be debited 2,500 rupees. Respective asset account is to be credited. Which is the concerned asset account? Provision for doubtful account is the concerned asset account. It is to be credited 2,500 rupees. Then unrecorded investment of 6,000 rupees is to be brought into account. So listen, old partner Sasi and Shankar invested 6,000 rupees, but they forget to enter into their accounts book. Later they know, it comes to their knowledge, then they entered that unrecorded investment 6,000 rupees brought into their accounts book. Now that 6,000 rupees belongs to investments, belongs to which account? Investment belongs to asset account. Okay, after recorded, investment belongs to asset account. So asset account 6,000 rupees increased. If the asset account increases, the partners get profit, right? If the partners get profit, where is the revaluation account appears? Revaluation account appears on credit side. So revaluation account is credited 6,000 rupees. Which account is to be debited? Respective asset account is to be debited. Which account is the respective account? Unrecorded investment. So unrecorded investment account data 6,000 rupees to revaluation account 6,000 rupees entered. Then unrecorded liability 2,500 rupees has to be recorded now. Liability belongs to what? What is meant by liability? Liability means you have to make payment, okay, to your supplier, right? So here they made payment but forget to record to their accounts book. Later they know, after they knowing, they recorded the unrecorded liability 2,500 rupees. Now recorded. So liability account increased. If the liability account increases, listen, if the liability account increases, the partners get loss. Okay, if the partners get loss, where is revaluation account occurs on journal entry? It is to be debited. Revaluation account is to be debited. So revaluation account data 2,500 rupees. Which account is to be credited? Respective liability account is to be credited. That unrecorded liability account is to be credited. So to unrecorded liability account 2,500 rupees entered. Then we have to leave some space for writing a transaction, that is a revaluation account. Okay, because we are going to prepare the revaluation account. After prepared revaluation account, we are going to pass the journal entry. Okay, so for that we have to leave some space. Now we are going to prepare the revaluation account. The format you already know, it is a T format. It has two sides, that is debtor side and creditor side. Okay, now we are going to find out where is revaluation account occurs on journal entry. Okay, let me leave the first transaction, because first transaction has the cash account and Shanmugam's capital account. There is no revaluation account. Okay, come to next transaction. We have the revaluation account. Where is revaluation account occurs? It occurs on debtor side 1,000 rupees. So you go to debtor side of the revaluation account and enter 1,000 rupees. Against this, what you have to write? Which account you are going to write? For furniture. Okay, furniture, to furniture 1,000 rupees entered. Then go to next transaction. Where is revaluation account occurs? It occurs on credit side, right? So you go to credit side of the revaluation account and write 16,000 rupees. Against this 16,000 rupees, what account you are going to write? That opposite account. What is the opposite account from the revaluation account? Building account. So you are going to write by building account. Why you are going to write building by? Because you always started with the word by on credit side and always started with the word to on debtor side. This is the format rule. Okay. Then where is revaluation account occurs on next transaction? It occurs on debtor side. Debtor side 2,500 rupees. So you go to debtor side on the revaluation account, enter 2,500 rupees in the amount column. Against this, what you write? You are going to write the opposite transaction. What is the opposite transaction? To provision for doubtful debts account entered. Then go and check the next transaction where this revaluation account occurs. It occurs on credit side, 6,000 rupees. So you go to credit side of the revaluation account and you enter 6,000 in the amount column. Against this you are going to write which account? That opposite account. That opposite account is unrecorded investment. By unrecorded investment account entered. Okay. Then go to the next transaction where this revaluation account occurs in this transaction. It occurs on debtor side. Okay. Debtor side how much rupees? 2,500 rupees. So you go to debtor side of the revaluation account and you enter 2,500 rupees in the amount column. Against this what you are going to write? That opposite transaction. What is opposite transaction from the revaluation account? Unrecorded liability account. So you are going to write to unrecorded liability account. Okay. So the respective revaluation account entered here. Now what we have to do? We are going to find out the total. How can you find out the total? First you are going to check whether which side has the higher value, debit side or credit side. Okay. So we have higher value on credit side, 16,000 plus 6,000, how much? 22,000. So credit side we have the higher value, then debit side. So you are going to consider that higher value as the total. So you are going to write the total 22,000 on credit side and 22,000 on debit side, same horizontal line. Okay. Entered. After entered the total, where you get the balance? If you get the total on credit side, of course you will get the balancing figure on debit side. Okay. Which side has the higher value? Credit side has that higher value. So we have to consider that higher value as the total. And then which side has the lesser value? Of course, debit side has the lesser value. If the credit side has the higher value, then the debit side has the lesser value, right? So how much lesser value we have? We have to sum up the lesser value. So 2,500 plus 2,500, 5,000 rupees plus 1,000, 6,000 rupees. That sum of the 6,000 rupees you are going to subtract from the total 22,000. So 6,000 rupees subtracted from 22,000, you will get 16,000 rupees. This is the balancing figure. 16,000 rupees is the balancing figure. If you get the balancing figure on debit side, what this called? This is called profit of the revaluation account. Profit on revaluation account. If you get the balance on debit side, it is called profit on revaluation account. If you get the balance on credit side, that is called loss on revaluation account. Okay. So you are going to write for this 16,000 against this to profit on revaluation account. So then what you have to do that 16,000 rupees? You are going to distribute that 16,000 rupees accumulated profit to the old partners capital account, to their old profit sharing ratio. What is meant by accumulated profit? I already explained you in the introduction part 1 video. What is meant by accumulated profit? Profit and losses belongs to the previous year, not distributed to the old partners, that is called accumulated profit. Okay, so previous year profit, this is called what? Previous year profit. Previous year profit belongs to whom? Whether it is old partners or new partners. Previous profit or losses belongs to the old partners, not for the new partner. New partner not entitled to share their profit, accumulated profit. Not entitled to share the accumulated profit to the new partner. It only belongs to old partner because their hard work only they get that profit. So that accumulated profit belongs to old partners capital account. So now we are going to transfer that 16,000 rupees accumulated profit to the old partners capital account to their old profit sharing ratio. What is their old profit sharing ratio? 5:3. Okay. So 5 for Sasi and 3 for Shankar. Okay. First we are going to transfer that 16,000 rupees first partner whose name is Sasi's capital account. So 16,000 rupees into His profit sharing ratio is 5. You are going to enter 5 on numerator, and the sum of the ratio 5 plus 3, 8 on denominator. Now we are going to cancel it. 180 is 8. 2 8s are 16. 3 0 is to be added here. 2000 into 5, 10,000 rupees. So we transferred that 10,000 rupees capital to the Sasi's capital. Okay. Now we are going to transfer that 16,000 accumulated, distribute that 16,000 accumulated profit to Shankar's capital. Okay. That 16,000, what is the Shankar's profit sharing ratio? 3. Okay. So you are going to enter 3 on numerator, and sum of the profit sharing ratio 8 on denominator. Now we are going to cancel it. 1 8 is 8. 2 8s are 16. 3 0 is to be added here. 2,000 into 3, 6,000 rupees. 6,000 rupees belongs to Shankar's capital account. Okay, now what we are going to do? Now we are going to pass the journal entry for this revaluation account, right? So for that, first, where is revaluation account? Balance occurs. Revaluation get profit. Okay, after revaluated their old partners, the profit and losses, they get profit. Okay, so how much rupees? 16,000 rupees. Okay, so if the balancing figure is on debit side of the revaluation account, you are going to pass the journal entry. Revaluation account is to be debited. Why? Because revaluation account balance is on debit side, so you going to pass the journal entry revaluation account data 16,000 rupees. What is the opposite account? To whom they distributed that 16,000 rupees? To old partners. Who are they? Sasi and Shankar. So you are going to credit the capital. Who are they? Sasi's capital account and Shankar's capital account. Okay. Okay. So now we are going to prepare the capital account. Capital account also has two sides, debtor side and creditor side. What is the format? Date column and particular column, and respectively 3 partners name we are going to enter here. Similarly on credit side we are going to enter date, particulars and respective partners name with rupees. Okay, this is the format for the capital account. Okay, first entry we are going to write fixed capital. In the capital account, what we are going to enter first account? Fixed capital account. Where is fixed capital account given in the question? Listen, on liability side, capital account, Sasi's capital 48,000, Shankar capital 40,000 rupees. That is called fixed capital. So as per the format, fixed capital you are going to enter on credit side. Okay, so 48,000, 40,000 respectively we enter on Sasi's and Shankar's column on credit side. What we are going to against this, we are going to write by balance drawdown. What is the by balance drawdown tells us, which means the opening balance. Drawdown B bar D means opening balance. Okay, when they started business, Sasi brings 48,000 capital and Shankar brings 40,000 capital. With the investment of the capital only, they started business. Okay, so that opening balance you are going to write on credit side. Okay, we entered. Then the new partners brings capital, right? How much rupees? 12,000 rupees. So when you check, whether you are going to check where is the new partners capital account, the first transaction. Where is it? It is on credit side. Shanmugam's capital account 12,000 rupees. So you go to credit side of the capital account and enter 12,000 rupees in Shanmugam columns. Against this, what you are going to write? The opposite account is cash account. So you are going to write cash account by cash account entered. Then now we are going to check where is capital account appears here. Here Sasi's capital account and Shankar's capital account. Where is it occurs? It occurs on credit side. So you go to credit side, 10,000 rupees, 6,000 rupees you are going to enter Sasi's and Shankar column. Against this, what you are going to write? The opposite account. What is the opposite account? Revaluation account. So by revaluation account entered. Okay. So capital account related transaction you are going to enter. Capital account related accounts and transaction we are entered into the capital account. Now we are going to find out the total. Which side we have the higher total? Of course, credit side we have the higher total. Debit side we don't have any values. Okay. So now we are going to calculate 48,000, 10,000, 58,000, 40 plus 6,000, 46,000, 12,000 rupees entered. Debit credit side we have the total, the same total we are going to enter on debit side in the same horizontal line. After enter the total, we are going to draw the two lines. Okay, that is called total. Okay, so after enter the total, which side we has the lesser value. Now we are going to close the capital account. What we are going to do? Now we are going to close the capital account. How do you close the capital account? You are going to balance the figure. Now we are going to balancing figure means debit side we don't have any value. So to balance it only you are going to enter 58,000, 46,000, 12,000 respectively. Against this you are going to write to balance carry down. What is meant by to balance carry down? To balance carry down means closing balance. C body means what? Closing balance. Okay. Against B body means opening balance. C body means closing balance. So now we close the account. Then after closing balance we are brought down to the opposite side and entered below the total 58,000, that 46,000 and 12,000. Okay. Against this what you are going to write? You are going to write by balance brought down, which means this is the opening balance of the next accounting period. So this balance brought down tells us this is the opening balance of the current accounting period, and this balance brought down tells us this is the opening balance of the next accounting period. Got it? What is the difference between both balance brought down? Okay. So now we prepared past the journal entries and revaluation account and capital account. Okay. Do you have any doubt? Please comment it in the comment box. Thank you. Take care.